When you have rates go from 1% to 5% in a year and a half, it's going to be very, very interesting to see how this all plays out. Look at the 30-year mortgage. When I bought my house down here 2 years ago, the 30-year mortgage was 3%. And right now it's almost 8%. The cost of money has gone up almost 2.5 times. And so this is starting to put great strain on the system. Look at the housing market. Right now, you have the mortgage rate on the 30-year, as I mentioned, just hit 7.48, tripled almost in a span of 2 years to the highest rate in over 23 years. The distortions that were created through all of these years of suppressed interest rates and easy money is starting to, I think, have consequences. You look at household savings right now, and household savings in 2021 equaled 2.1 trillion, and that was after the 4 trillion in stimulus that was handed out. And right now we're down to 190 billion. I mean, you're watching the evisceration of people's savings because of the level of inflation, and the cost of living is just increasing exponentially in the things that we need, food and energy. It is believed that the consumer in total household debt right now is $17 trillion. So, 60% of the country is living paycheck to paycheck. So you have a situation where the public is stretched. Their savings has been blown through. There are massive distortions in the economy that haven't even funneled their way through yet. I'll talk about that in a moment. But the consumer is back in debt again, massively, living paycheck to paycheck, record credit card debt, record low savings. It is not, it's not a recipe for good times. You look at even places like the Shanghai Gold Exchange and the Shanghai Futures Exchange. Last week, they had in total about 140,000 kilos of silver delivered off the exchange. And both of these exchanges are at their all-time, well, not all-time, at new fresh lows of inventory since silver squeeze. You're seeing, last week we saw 1.9 million ounces of silver leave COMEX and SLV. There's someone who wants physical silver. Right. Tesla takes about a kilo of silver, and as the demand for battery-powered vehicles and the demand for green and digital applications continues to grow, you'll see more and more and more industrial need for silver, where it's a depleting asset that is really experienced a renaissance in terms of its monetary value and appreciation. BlackRock, who increased its PSLV holdings to almost 22 million shares. The interesting thing is that they're one of the custodians also of SLV, and yet they're buying PSLV. Right. PSLV you can't short. SLV you can. PSLV is a more pure play, I guess, if you will, and it's less corrupt than, well, it's not corrupt. What is corrupt is SLV and GLD ETFs that you can naked short. The things that are happening with the BRICS. And Saudi Arabia was formally admitted into the BRICS, as was Argentina, Egypt, Ethiopia, Iran, and the United Arab Emirates. So when you combine Iran, the UAE, and Saudi Arabia, you're talking 80%, man. 80% of global oil production is now under the BRICS control. You talk about what does make the dollar the world reserve and what makes our markets what they are. I mean, the dollar is the world reserve for a few reasons. One, because we have the petro status. Well, I mean, in essence, you could argue the petro status is now gone, because the argument or the deal was that we would protect you and you don't sell oil for any other currency besides US dollars, and then you recycle those dollars into our treasuries. Well, they're selling treasuries, right, and they're striking deals to like with China, to sell their oil for yuan. You could argue that's gone. And the fact that they've joined the BRICS and the Belt Road and the Shanghai Cooperation Organization and the New Development Bank, and have told the world they'll take other currencies, it is something that will be gone, if not completely gone, at some point. And then you talk about the full faith and credit of this country. Now, the 2022 balance sheet just came out, and it showed $155 trillion in debt. This is by the U.S. own admission. 32 trillion on balance. I mean, on the books, and then off balance sheet, Medicare, Medicaid, Social Security, and government military pensions. They also showed what their asset base was. They have 5 trillion in assets, just over. We do, of which 40% is student debt. Over 1.4 trillion, they call the largest asset of the United States. You know, one of the things that you and I haven't talked about, I don't think, is the financial or the economic advisory committee to the U.S. government. The number one economic advisor to the Biden administration is a man named Jared Bernstein, and his entire thesis is to shed the dollar's reserve status. He wrote a report that was, or an article that was picked up in the New York Times, another one that was picked up in the Washington Post. The most famous one he wrote was Dethrone King Dollar. These are very unusual, strange times in the market when you see January 1st, 2022, the interest rate on the 3-month Treasury was 0.06%. And here we are, not even 2 years later, and we're at about 5.5% on the 3-month Treasury. When you see an increase in the cost of money to that degree, well, things are going to start to get very interesting. So let's look at a few of them. Right now, you have Warren Buffett, who just sold somewhere in the neighborhood of $8 billion worth of securities, and he's sitting on almost $150 billion in cash in short-term treasuries. Look, this is a guy who's a value investor, and if he really felt that the market was so value-oriented, he wouldn't be sitting on nearly $150 billion in cash and just offloaded $8 billion in securities. Of course, you have Michael Burry, the guy that made his name in The Big Short, shorting the subprime market, just bought or shorted the market with $1.6 billion worth of his fund, or 93% of the entire portfolio in terms of its value is on the short side right now. So you have a legendary value investor who's sitting in cash, and you have a guy that certainly isn't afraid to go all in when he sees something, even if it is counterintuitive to the mainstream. Well, he certainly is playing things on the short side. But look, you know, you have a situation right now where higher interest rates are becoming a self-fulfilling prophecy, in the respect that you have, you know, all of these banks and all of the public really that has been duped, I guess you could say, or incentivized into not only speculating or taking on greater amounts of debt or extending themselves perhaps farther than they should.